Good morning, good afternoon, and good evening, and welcome to this week's episode of Maconomics. I'm your host, Ross Mack, and I'm here to try to help you get to a bag. Look, we got a new caller calling. Talk to me what you got.
Yo, Ross Mack, question. So my cousin told me like last year I need to refinance my home. Now, keep in mind it's the same cousin who told me I need to join Wake Up Now, so I didn't really take it seriously at the time. But I'm hearing something now from a couple other people that they did it and it was a good idea. Is it too late for me to refinance my home?
Hey man, amazing question. Look, it's now the best time to refinance? Probably not, right? But let's actually talk about what it is, right? Look, mortgage rates have been on a roller coaster over the past 2 years, right? We witnessed them reach record lows, and now mortgage rates are probably around 7%, which is higher than they've been in about 20 years. So look, I say this all to say, right? Rates go up and down over time, so they probably won't be this high forever. For that reason, though, it is important to truly understand when and if it makes sense to ever refinance. So let's actually talk about why a person may want to refinance, right? Now look, the biggest reason is to get a lower interest rate. So hypothetically speaking, right, say you got a mortgage and it's 7% a year ago, and today interest rates are now around 5%. Then you might want to refinance and get a lower rate. And you could do this to save money on the interest you pay. All right, so here's an example, right? Say you got a 30-year loan on a $300,000 house at 7%. Well, your monthly payments will be close to $2,000. And refinancing the 5% will cut it to about $1,600. And that's saving roughly $400 a month, which is about $4,800 a year. It's a pretty big difference, right? However, there are some things to consider before you decide if you want to refinance. The biggest is, does the interest savings actually outweigh the other associated costs? Because what exactly is a refinance, right? You're essentially replacing your existing mortgage with a brand new one. Therefore, there are going to be some closing costs associated with that. You can typically expect to pay 2 to 6% of the loan amount in closing costs, which can include an origination fee, appraisal fee, title insurance fee, and a credit report fee. So look, your interest savings have to be greater than your closing costs for all of this to make sense, right? Now, another reason a person might want to decide to refinance is if they want to take out equity via a cash out refinance. Now, with the cash out refinance, you're going to get a new home loan for more than the current amount that you owe on your house. Now, the difference between the new mortgage amount and the balance on your previous mortgage goes to you in closing in cash, which you can spend on home improvements, such as paying off some debts or any other financial needs. However, it's important to know that you'll now be repaying a larger loan with different terms, so it's important to weigh the pros and cons before committing to a full cash out refinance. Now look, in general, when it comes to a cash out refinance, you want to make sure you have, one, an adequate credit score, right? Think of something over 620. You also want to make sure you got substantial home equity. Look, in general, lenders typically require you to maintain 20% equity in your home. And 3, and lastly, you want to make sure you got limited other debts, right? Remember, you will be getting a larger loan, so you want to make sure your debt to income ratio is about 40 to 50% or less. Now look, another reason for potentially deciding to refinance is to get a shorter loan term. Right? If you were to refinance from a 30-year to a 15-year mortgage, your monthly payment will often increase. But not only is your interest rate on a 15-year mortgage lower, shaving off years of your mortgage will mean paying less interest over time. And look, lastly, the interest savings from a shorter loan term can be especially beneficial if you're taking a mortgage interest deduction on your tax return. Look, when it's all said and done, man, one of the things you want to do when it comes to refinancing is make sure that you're going to be saving money in the long term. But I hope that helps. Next caller. Talk to me what you got.